It's Elizabeth Rose. I just wanted to bring you some quick information on some developments that we've had so far this week. As you may have heard today, the Fed released their Beige Book, which is their anecdotal read on what's going on in the economy. And quite frankly, there was no surprises there. And the no surprises led to no reaction in either of the markets, both the stock market and the bond market. Now, something that did get a reaction was yesterday. We saw that housing starts or building permits came out 7%, which was the best number that we've seen since June of 2008. And this tells us that builders are starting to build again, which means they're also hiring. They're buying supplies, so this certainly adds a lot of additional support to an already recovering housing market. And it's just one more data point that tells us that this is, in fact, a recovery. We are trending in a positive direction. It's just not a temporary blip on the map, if you will. So it's good news for the housing market, and we're so happy and excited to see it as we approach the spring season. And just to give you a little bit of insight of what's going on with rates, practically nothing. It is pretty much unchanged. Rates are still remaining low, and as long as the Fed is in there buying mortgage-backed securities, with both handfuls, quite frankly, they're just both fists, they're buying. And as long as they're doing that, we will expect to continue to see that rates will hold pretty low. Now, they may creep up over time, and we certainly have volatility week in and week out, but as a trend, they are remaining low. Currently, the last couple of days, they've improved slightly, and this typically happens after we've had some really horrible news like we did on Monday with the tragic events that happened in Boston. So we did get some improvement after that. It was slight, though. It wasn't anything of any great magnitude. But rates are going to hold steady as the Fed continues to buy, and the Fed has been very outspoken on this lately. There's some dove presidents and some hawkish presidents, and the doves are certainly out en masse, and they're locking arms and banding together, and they are very convicted with the continuance of this QE Unlimited, which is taking place now. This is, the third round of our quantitative easing. And even just today, Rosengren, who's one of the Fed presidents, came out and said that he is strongly supportive of this continued stimulus. So as long as that's in place, we're going to have low rates. Now, what happens when they pull out? That's another story for another day. But you'll have to stay in tune with me. I'll keep you posted. But for now, I wanted to let you know that great news. The housing recovery is in fact a recovery. The trend is our friend. We're loving it. We're on the way up. And we're even seeing some good things from other parts of the country, not just here in Dallas, Texas. We're seeing great news out of California, Arizona, even Florida is starting to make a comeback. So this is really great for our country, great for our housing market, and great for each and every one of us in our individual neighborhoods. So I just wanted to bring this to you today, and if you have any questions, please don't hesitate to reach out. I'd love to hear from you. I love talking about this stuff and love what's going on. So give me a call, we'll talk about it, or post something here below this video, and give me your feedback. I'd love to hear from you. Until then, have a great day.